Hey, what's going on, everybody? So I'll be making a video on S&P today. Okay, we'll jump right into it. So we have here the weekly chart. As you can see, we made a new all-time high last week, just a little bit. And right now, the weekly candle is a bit of a bearish. It is a bearish engulfing candle. It closes on 1 day and 20 hours. Um, Overall, I believe S&P is still bullish and will continue making new highs throughout this year. But here, short term, I do believe there's a bit of a correction going to be coming. And I actually spoke about this, I think, last week in a video I made about S&P as well. I dug into like the daily and like 4 hour time frame, I believe, about divergences building. So we can talk about some retracement levels and as well as some upside targets because it could very well just continue on to the upside. I mean, the 21 weekly EMA is still pointed up. That's why I believe that the uptrend is still intact and will continue throughout this year. But that doesn't stop the S&P from having a short-term correction, though. Right? Weekly super trend is still green as well. So I'll pull up a Fibonacci from this high and this low, and we can continue down to the daily time frame. So make this a little bit better. So for a short-term correction, I mean, so right, this is the futures, and right now we're under the 786, right? So the next target, the next likely target is going to be the golden pocket between 5,214 and 5,227 for the S&P futures, right? And from there, we can expect probably a little short-term bounce, or we can just break right through. That's very possible too, but more likely than not, we're probably going to see a short-term bounce from here. Maybe you get like a test of it and then a retest of the 786 and possibly another leg down towards the 50% retracement, which is another key area of support as well. 50% retracement of any range or move around any asset is a great area to always look at just because it has very high confluence. It's a 50% retracement. That's at 5,166. Okay. And a percentage move as well from this local high as of right now down to the bottom of the golden pocket would be 2.85%. 50% retracement would put this at a 3.75% drawdown, right? That's pretty decent drawdown for equities. Okay. I'm not talking about crypto here. That's nothing to crypto. um, so another, I'm going to leave the EMAs on really quick too. So you're going to have confluence with the golden pocket because of the 50 EMA coming up. By the time, if we do get down to the golden pocket, by the time we get down to it, the 50 EMA is probably going to be just right there, right? Just another day or two. Okay, so like I said, there's going to likely be a short-term bounce there. If not, maybe the higher low forms there. That's also a possibility as well. Or we can kind of consolidate maybe a little bit, let the 100 EMA pop come on up and get closer to the 50, and maybe we have a breakdown to the 50. Maybe this 100's up here by now, and we get a bounce, and then may form a higher low and continue upwards. Okay, and I'm saying higher low because we don't want to see a break. Honestly, we don't want to see a break of the 0.382 at 5,119. Your last level of support is going to be the 0.236. But if we're testing that, there's a good probability that we just end up testing these lows here made in April 19th at 4,964 and just breaking them. Okay, we really want to hold the 50% retracement and the 0.382. Okay, that those are the key areas that you really want to hold for the S&P for to form a higher low and continue on upwards. And if you were to continue on upwards, from where it's at now, or you have a retracement to the 50%, and we break these highs, the next target would be 5,619 on the S&P futures. Okay, that'll be the next target. Then 6,000 plus after that. But let's first form higher lows and break these highs, right? In due time. Now, going down to a 4-hour time frame. Turn off the EMAs. We can see that bearish divergences did form, right, on Market Cipher B, getting into this high area. And now we formed a 4-hour lower high and making a 4-hour lower low. Also, VWAP is negative and money flow just turned red. You can see last time money flow really turned red off of the trend. We came down, I'll just say, we'll just do it from here. That's when it turned red, right? So do it from this high. A 5.5%. So if we come down a 5.5% from here, that would bring us to a double bottom area. I don't think we will get down there, to be honest, but it's very possible. Who knows? This could also just end up being a big range of consolidation, and that could also be possible too. But for me, I would preferably want, if I were to go long, right, look for long entries and so on and so forth, a more bullish look, I'd want to see higher lows form. But nonetheless, VWAP is negative and money flow just turned red. What I see VWAP doing here is kind of just staying negative for a while, maybe come up close to coming positive, but then get stay negative, form a bullish divergence, or that's a little too deep for the VWAP. What I usually see it doing, kind of like coming on up. So VWAP would be coming up on higher lows while price action makes lower lows. That's a good sign, especially if the money flow comes red and starts to curve on up, while price action makes lower lows and money flows curving. Also, 4-hour massive big green dot will form as well. Like I said, maybe you get down to the golden pocket and that prints, and then you get a reaction off of it, all right, and a little bit more upside to a lower high, most likely. And momentum waves will probably kind of form higher lows as well, with some 4-hour bullish divergences while price action makes lower lows. Short-term bearish on the S&P, but higher time frame, it's still a bullish outlook. There's nothing really too bearish about this. Okay. Now going back to the weekly with Market Cipher, and I will turn off this Fibonacci just to make it clean. There are weekly bearish divergences starting to form. Okay, price action has higher highs, and Market Cipher B on the momentum waves has lower highs. Now, this doesn't mean the top is in for S&P. It could be. Never know. I doubt that it is. You can look back in history where the S&P are really or really any good stocks that have it's just a uptrend upwards, a grind up. Higher time frames like this will form many bearish divergences. Many. Okay? We can come up, go down, come up again, come up, just like this, what momentum waves, while price action, continues to just grind on up. So I doubt that the top is in for the S&P. I could be wrong. I doubt it though, especially with an election year. Also, money flow is still thick. Yes, it is starting to point down, but it pointing down doesn't mean that price has to go instantly down with money flow. Usually what you see happening is money flow starts downtrending and still makes higher highs on price action. Okay. Weekly stochastic is still pointed up as well for now. momentum waves do look like they want to print a green dot if S&P gets consecutive red days on the daily. So overall, short term, a bearish look on the S&P, just very short term, nothing crazy. I don't believe a top is in, but a higher time frame, still overall very bullish on the S&P 500 and pretty much equities as a whole, right? S&P has had a phenomenal run. Consolidation is normal. The little small corrections on it are normal. Nothing to be afraid about. If anything, it just brings more opportunities to make some more money. So I'll leave it there with that, guys. Thank you and peace out.